Global equities have been a fantastic asset class over a significant amount of time and producing those kind of double-digit returns over the last decade. I think what's challenging is that we've seen an increasing concentration of returns within global equities, and I think we can either run away from that challenge or we can embrace that challenge. And this is what DNA is very much about, embracing the challenge of identifying the key leaders that are going to drive global equity performance. And ultimately, if we can identify those, they drive almost half of global equity returns in any given year, just 2% of stocks in global indices. And so the whole point of DNA is to aim to identify those maybe 50 stocks that are going to be those key drivers of outperformance. And ultimately, that's going to deliver the global equity returns and outperformance that our clients want. I think when we think about the concentration of returns we're seeing in today's global markets, this isn't new. If you go back to the last decade or the decade before, there's always been a group and a relatively select number of stocks that have driven the vast majority of performance in global markets. And as a technology investor in the last 20 plus years, I've certainly been party to that, whether that's been the Magnificent Seven more recently or the FANG stocks in the decade before that. And even if you go back, back to the Nifty 50 in the decades before that, this is not a new phenomenon. And again, we can run away from that challenge, or again, we could harness the best investment teams at Janus Henderson to try and identify what we think are going to be those key leaders in the stock market in years to come, globally, across sectors and across market cap. And ultimately, if we can do that, we're going to be identifying tomorrow's acronyms today. When we thought about creating DNA, we really wanted to harness the real DNA of Janus Henderson, which is we are great stock pickers. We are fundamental bottom-up stock pickers, and we have many teams sitting globally across sector, many of which are actually sector-focused and thematic-focused and are trusted by our clients already to manage billions of dollars and have track records going back 10, 20 or 30 years. And we wanted to harness those, in many cases, award-winning teams to deliver their best ideas into this portfolio and to create a relatively concentrated portfolio of around 50 stocks that we think has the best chance to capture those best performers that are driving the vast majority of global equity returns in any given year. And if we can do that year in, year out, and identify tomorrow's acronyms today, we aim to deliver that great performance over the long term. So what we're trying to do with DNA is, first of all, to choose what we think are some of the best investment teams in Janus Henderson. Those are in many cases sector focused or thematic focused. So we think about our technology teams, our healthcare related teams, our sustainable and natural resources related teams, our financials team, our property team, as well as our emerging market team. That gives us a good blend of both strong investment performance, but also across sector, across market cap, across geography. They provide me both in terms of feeding into our thematic framework and lens, but also just best ideas, and then pulling together a long list that then I can work with Nick Harper, who works on our portfolio construction services team, to create a blended portfolio that ultimately takes what would be quite a growthy or thematic portfolio into a core global equity offering.
So this portfolio has two key components to it. We leverage off the very strong active equity franchise that we have, with Richard Claude working with a large array of high quality individual managers to provide names into the portfolio that the underlying managers have conviction, but also Richard can see and think about the holistic fit with the portfolio. We then take those names and we aim to optimize them. And what does that mean? It means that we're blending them in a way that means you don't have big biases versus the benchmark. This is a core equity holding with a lot of the other risks managed that will really be focused on the underlying stock selection skill of the contributing managers. We have a huge array of different strategies within the firm, and we have a lot of very high quality managers. And what that means is we have people that deliver genuine value in an investment portfolio. That, combined with our expertise in portfolio construction, mean that we can take those managers with the high quality, long history of delivering relative performance versus their asset classes, and we can blend them in a way that enables you to create a holistic portfolio focused on the alpha that should be expected to deliver in a wide range of different market environments. So within this process, this is different to either a best ideas or a thematic or any other kind of equity fund. So what we're doing here is we're giving the purchaser of the fund access to a wide range of different themes, but blended in such a way that the overall product doesn't have big biases in any particular direction and very much represents a core equity holding. So we aren't going to be heavily weighted in technology or any of the traditional sectors you might see from a thematic manager. We're also going to be concentrated. We're drawing off a wide bank of different individual contributors. We are accessing the entire range of internal capabilities, and we are focusing on the stocks. So this is a thematic portfolio that should be able to perform across a wide range of different market environments.